The gross domestic product of the UAE has grown 236-fold in the 43 years since the establishment of the Federation, according to His Excellency Sultan bin Saeed Al Mansouri, the UAE Minister of Economy. Minister Al Mansouri stated that the UAE's GDP started at just 1.77 billion dirhams in 1971 and is expected to reach 419 billion dirhams by the end of this year, with the economy to grow by 4.8%. Looking ahead past 2014 and citing the International Monetary Fund's recent projections, Al Mansouri said the economy will continue to grow at a rate of between 4 and 5% over the next 7 years, and stated that the general budget is expected to see a surplus of 9% of the GDP, double the figure of 2012. Non-oil sectors now account for 69% of the UAE's GDP, with oil accounting for the remaining third, as the government continues its efforts to diversify away from oil and rely more on non-oil income. Despite the positive growth rate, inflation rates are expected to remain between 2 and 3% by the end of 2014, thanks to the flexibility of the UAE's economy and the measures being taken by the government to curb price hikes. Al Mansouri also expected the UAE's bulk commodity exports, including oil, to grow by 5.8% to $381 billion this year, compared with $354 billion in 2013. Senior government figures, heads of regulatory bodies and financial institutions have called for greater integration among the capital markets during the inaugural two-day Arab Capital Markets Conference being held in Dubai. His Excellency Sultan bin Saeed Al Mansouri, the UAE Minister of Economy, delivered the opening speech of the conference, where he urged for more cooperation and united efforts among the Arab capital markets as we live in a globalized world. More than 400 delegates from investment firms, capital market authorities and government entities have gathered at the forum to discuss common challenges, implementation of IOSCO principles and encourage sharing of information. According to His Excellency Al Mansouri, as the UAE and Qatar have earned emerging market status, more foreign capital investments will be attracted into the region, and therefore laws of transparency should be enacted to protect those investments. During the conference, His Excellency Al Mansouri also announced the launch of ADX Private Companies Market with Manazil Real Estate and the National Investor as the first companies to be listed. Speaking during the conference, the Secretary-General of the Union of Arab Securities and Commodities Authority highlighted that currently they have formed cooperation between 15 Arab regulatory bodies. As a result, the market capitalization has grown to $1.4 trillion, and it represents an opportunity for developing newer markets. Panelists at the conference further stressed on speeding up privatization and legislations on liberalizing trade.
Actually, in general, if we look to the capitalization in the region, we are talking about $1.4 trillion, which is not as huge as it should be, and this is give us more challenges regarding what we should do in order to give more role to the capital market. I believe that this region capital market has a potential to grow, and we need to put more efforts, and this is how the Federation of Securities Commissions in the region can play a role in helping the new regulators to upgrade their regulatory framework and to boost its role in regulating the market.
We recently released a number of research pieces looking at Arab capital markets, and I will be speaking regarding two of them in the conference. Some dealing with more technical issues like related party transactions, which is a big issue for the region in terms of how parties, transactions between parties which are related are conducted, whether those are transparent. Another issue, for example, is disclosure of beneficial ownership. The quality of corporate governance codes, which are starting to be reviewed in the region in many countries like Oman, like Egypt, and the revision of disclosure requirements is also something that we've looked at, and we made a number of recommendations. So there's a number of sort of technical issues specific to the codes that we've been addressing, specific to the listing requirements, but also sort of transparency and disclosure requirements more generally that would basically, in our view, help bring more institutional capital to this region, which is something that I believe all markets are interested in.
4 cities in the Middle East, Dubai, Abu Dhabi, Muscat and Cairo, which are leading the information and communication technology drive in the region, are adopting smarter practices to foster innovation, productivity and efficiency, according to the latest edition of the Ericsson Networked Society City Index report, which released on Monday. The index ranks 40 cities and measures their ICT maturity in terms of leverage from ICT investments in economic, social and environmental development. The triple bottom line effect. Dubai, Abu Dhabi and Muscat are among 9 cities that have been added to the 2014 edition of the Networked Society City Index report, which ranks Cairo as number 3 in terms of ICT maturity improvement from 2013 to 2014. According to the report, cities with a low ICT maturity tend to be improving their ICT maturity faster than higher performing cities, indicating a catch-up effect. Many cities also have the opportunity to leapfrog others by avoiding expensive and increasingly obsolete physical infrastructure and instead moving straight into innovative applications using advanced mobile technology. The top 5 cities of Stockholm, London, Paris, Singapore and Copenhagen remain the same, though Paris has now surpassed Singapore to take the number 3 slot. And shareholders in Emaar Properties, Dubai's largest listed developer, have approved a special cash dividend totaling 9 billion dirhams on Monday. The dividend, which was approved at the firm's ordinary general meeting, was related to the flotation earlier this year of a stake in Emaar Malls Group, a unit of Emaar Properties. EMG listed 15.4% on the Dubai financial market, raising $1.58 billion from the sale, which was well covered by investor bids. Emaar had proposed distributing 5.3 billion dirhams of proceeds from the initial public offering to shareholders, as well as 3.7 billion dirhams of dividends paid by EMG to Emaar prior to the listing. The dividend is equivalent to 1.27 dirhams per share. With a market capitalization of $21.25 billion as of November 23, 2014, Emaar is today one of the most valuable companies in the properties sector. In the past year, Emaar's stocks gained in value by about 57%, while growth in value over the past 52 weeks is about 95%.